We see how supply is increasing into the lows. We see how demand is coming, at the lows, at the stop in action. That kind of defines the stop in action itself. So you could see all of this here, 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 then here, here, here. So that low defines the stop in action, and then look at the extension of the first rally. So in the first case, we are seeing coming to the almost the highs of this first initial reaction. Second case, the same. So I would be assuming, William, that we probably have to kind of stop somewhere here. Like we're at the point where we should be maybe just a little bit more up, just to cover this bar a little bit more. And obviously, what are we doing here? We're working with this bar. We're working with this bar. We're working with this bar. This is the breakdown bar after the first initial reaction and attempt to rally. And it should be covered. And I think we're right there. So by this analog, we're confirming, I would say that, the takeoff probably is a legitimate takeoff, but we need to have some kind of testing, right? So test here at 5. We had this test, but I think we should have one here as well. What do you think?
Well, it's funny you should mention that, because when I was just comparing the bases quickly, I think this last leg, number 3 here, is showing strength. As in, we don't look how deep we come back down here and test on this reaction. Obviously, we hold a high low here. We come back down here, we test, but it's very complex as opposed to this.
Suggesting even if we're going to have a rally, we're still in the trading range.